Markets remain uncertain over Elon Musk's $44 billion takeover of Twitter. With the purchase now revived, speculation is back on the table over the deal's financing, as well as what Twitter under Musk could look like. For more, let's bring in Matt Schettenhelm. I'm going to make sure I get that name right. And Mandeep Singh of Bloomberg Intelligence. Mandeep, just as we were kind of coming back and talking about this intro, we see Twitter shares down about 1.5% off their session lows on a report from CNBC here that the deal will actually get financing. This comes off reports that Apollo, among others, is actually backing out of the $13 billion they promised. Does any of this matter? Is this deal going to get done?
Well, so he has the commitment letter from the banks on the $12.5 billion debt component. Now, the markets have changed from the summer, and obviously, the yield spreads have gone up. So you could argue, financing around $13 billion for such a large buyout, it's tough in this environment. But at the same time, he has a commitment letter. So let's see what the banks do over there. But I think it wasn't a change of heart. He realizes, if he goes through the trial, it won't be a good PR for him and Tesla. So that, to me, seems to be the kind of the main reason why he's going ahead with the deal right now.
Matt, I want to bring you into the conversation because you have done some exceptional analysis of this very issue of the financing and, the hypothetical situation where the planned financing starts to fall apart and then what happens legally. What more can you tell us?
Yeah, I mean, that's exactly right. At this point, Elon Musk's legal case is extremely weak. It was very weak before he wrote that letter 3 days ago saying, I'll agree to the $54.20 purchase price. It's even weaker now. And so that means the only legal way that he can get out of the deal is if this debt financing were to fall apart. And at this point, it's very much just a theoretical risk because there's been no indication that the banks are walking away from, as Mandeep said, their commitment to fund that. So at this point, it's just a theoretical risk and no reason to think that's going to arise. But if you're Twitter, you have reason to be very cautious because this has been a roller coaster.
Well, Matt, I want to stick with you on that point because I think one of the issues that Twitter had, certainly some of the analysts on Wall Street had that covered the social media company, was that if Elon Musk backs away from this deal, Twitter essentially to any other buyer becomes untouchable to some extent. If the financing disappears, as you just outlined, can Twitter still claim that case?
Yeah, so, I mean, first of all, if this financing disappears under the agreement, Elon Musk still has a duty to go out and try to find more. So it's not that easy to do that. But at the same time, the larger point you raise is exactly right. The interesting thing here is that Elon Musk has really damaged this company, I think, throughout this process as he's tried to get out of his agreement. And it's put the company in a tough position going forward. For example, with the whistleblower claim that he's made a big deal about, there's a real possibility that the Federal Trade Commission comes after the company now for hundreds of millions of dollars in penalties. And it's very likely, I think, that that's going to be Elon Musk's problem going forward.
Well, that's really helpful perspective, Matt. I want to bring Mandeep back in because, Mandeep, kudos to you for trying to make sense of those early comments from Musk on what Twitter might look like after the deal, this idea of the everything app. You've put pen to paper. Walk us through what that might look like.
Yeah, so look, the closest comps that come to my mind are, LinkedIn and YouTube. And the reason I say that is because Twitter, at the end of the day, is a network that brings in creators and followers, and they can find ways to monetize both of them. Creators, yes, every social media platform, whether it's TikTok or Meta, they're wanting to bring more creators. Well, Twitter already has them, so if they introduce more tools, which is what Twitter Blue is all about, that could be high gross, 90% gross margin revenue. And look, Twitter hasn't executed at all since its IPO. We know that, they have failed to monetize the engagement through ads. But there is potential, and that's why I think LinkedIn and YouTube offer the best kind of model in terms of using both subscriptions and ads, and they have done it successfully, over the last few years.
Well, Mandeep, very quickly, let's talk now about the stock price here. We're trading at $50.65. Is $54.20 then the ceiling that Elon Musk has now created for the stock?
Yes, I mean, look, he's overpaying. When you compare it to valuations of Snap and Pinterest, it's clearly 2 to 3 times the EV to daily active user multiple that we have calculated. But at the same time, again, there are only 4 or 5 platforms with daily active user base of over 200 million, and Twitter has that stickiness. So it's about just figuring out a business model and monetizing it.
And staying on that subject, Mandeep, thank you very much. Thanks, Mandeep. Thank you, Matt, very much of the Bloomberg Intelligence All-Star team. On that note, our Bloomberg headlines right now that Musk and Twitter, that the resolution of this deal is said to stick on that issue of debt contingency. So obviously we're going to continue to watch this right now, Kriti, as we have watched the story of how this gets financed front and center. Just to reiterate that headline that the Bloomberg terminal has just cranked out, that Twitter and Musk, that the resolution of all of this is said to stick on that debt contingency issue.
Yeah, and of course, on the back of that headline, we are seeing Twitter once again hitting new session lows, now about $50 on the share price. I want to bring back Mandeep Singh. We're going to not let him leave this set. What do you make of that breaking headline? The stock market clearly not reacting well.
Well, we know the stock fell, as low as $37 when, he walked away from the deal. And so, look, the stock price will reflect the uncertainty around the merger going through. And if the debt financing isn't coming, $12.5 billion isn't an easy gap to fill. Even though, he's the richest man in the world, he owns $170 billion of Tesla stock, still he has to raise that money. And so I do think, it's a problem. And given, Twitter management and Elon Musk are negotiating behind the scenes before the trial gets underway, look, all this would come into play. Twitter management wants to make sure, the legal department wants to make sure that this deal goes through under all circumstances. And that's what I think they'll be after.
All right, hang tight, Mandeep. I want to bring Ed Ludlow, who obviously has done extensive reporting on this story as well. And I'm just looking at the full Bloomberg write-up on this story as well, Ed. Right. And we're still watching what happens with the two sides, I believe, expected to file a motion with the court when they have settled all their questions. But what more can you tell us on what your observations are right now?
Yeah, so according to sources, the debt financing portion of Musk's package is still at issue, and it's a sticking point, at least part of the sticking point between the two sides. The problem is, in the original April 25th agreement, when Musk agreed to buy Twitter at $54.20 a share, that was not contingent. There was no clause in the agreement contingent on the debt financing proceeds being received. And then you'll remember what happened 2 evenings ago when Musk's representatives wrote a letter to Twitter. The proceeds from the debt being received was part of his offer, his update to his offer. So clearly it's a sticking point. You're looking at the reaction in Twitter shares. But, I guess the greater context here is that they're ready to move forward once that's resolved. And indeed, one source said that if we can get past this point, we could move very quickly, indeed have closing within a week or so. So we're paying very close attention to what happens with that debt.
Ed, I'm curious, though, about, once again, it comes down to the financing, right? So if he doesn't have that financing, what does that have to do to his personal wealth then? There was a big correlation for a while, an inverse correlation between Tesla shares and Twitter shares for a long time. The idea here simply being that to finance this deal, he might have to sell more and more of his Tesla stock. Is that dynamic going to come back into play?
Yeah, it's fascinating, isn't it? There's $12.5 billion of debt and an additional $500 million revolving credit line. And frankly, the conditions and the market for leveraged debt have changed, right? We're a long way in the world from where we were in April. He raised about secured backing for $7.1 billion of additional equity financing from partners. What's happened in that time? Well, of course, Tesla stock is also lower than where it was in April. And so that impacts the amount that if he did have to sell more Tesla stock, obviously there's a consideration around the volume of shares he may have to sell at this point in order to meet the dollar value of that commitment. So I think that's part of the pressure we see in Tesla stock right now. It's just not just the element of key man risk, but the idea that he might have to liquidate more of his holdings of Tesla in order to finance this package.